Hello, and welcome to this episode of To The Point. I'm Neil Stanley. Today we're going to talk about how you might be able to improve profit by raising deposit rates. I know that sounds counterintuitive, but I think it's an opportunity for some of you to take the niche product you have called customized CDs and raise that rate and make more money in the process. Let's look at it today. Why do I think this is true? Well, it's because of the rate movements that we've had. We looked at the FDIC report. It was as of November. It was produced in December, and it showed the average CD rates. It showed the Treasury rates. It all made sense. But then what's happened since then has been that CD rates haven't moved much. You can see here from the S&P report as of January 14th that the average U.S. rates have moved little since November, when we see 4 to 9 basis points of rate change. But when we look at U.S. Treasuries and we see what they were as of January 14th, since November the changes have been pretty significant. 27, 47, 41 basis points on the 5-year as of that day. So with CDs moving very little and Treasuries, which is your opportunity to invest, moving more significant, it's our theory that maybe a price calibration makes sense. Here is a typical client of ours with standard rates down in that national average level in the bottom 1/3 of the local market. That's wonderful. We've got limited edition and companion accounts over here, keeping funds from leaving and attracting potentially new funds. But what's happened is the customized CDs in many cases have been paralyzed at the same levels they were 12 months ago, when Treasuries were very close to the levels that you see here for the customized as of today. So what if we looked at the profitability of this and really did an assessment? Is this profitable? Absolutely. Every dollar that you get at these rates is profitable. But the question is it optimally profitable? That's not likely, given the fact that if you lose a deposit here that you could have invested in a Treasury, that's a lost opportunity. So instead of keeping those customized rates down low, maybe for those who have surplus deposits, we could raise that rate closer up to U.S. Treasuries, which is represented by this line, and actually make more money by keeping more deposits and investing them in comparable term Treasuries. Now, that's an opportunity that didn't exist a year ago because Treasuries were so low. So we wanted to bring this up to you and point out this opportunity for those who have surplus deposits. If you don't have surplus deposits, what's that look like? Well, if you're not in a position where you have excess funds, maybe instead of investing those funds, you're reducing your borrowings. Wholesale funding costs have risen dramatically in the last year. And so maybe you can be positioned with your customized rates even above U.S. Treasuries and still improve profitability by attracting more funding while your competition is pretty much dormant at the rates that they've been at. We do recommend keeping those standard rates low. Now, we know that if the spread gets too great between standard rates and customized, you may have some seepage as your front line starts to tell more people about the great customized rates you have. So we would encourage you to use our e-learnings to make sure that your people are trained and up to speed on the importance of maintaining cost of funds and the importance of the stages of the CD offerings. But this is an opportunity now as rates start to rise for you to know when and where to be competitive in this marketplace. So to summarize, we hope that you are calibrating your opportunities today, keeping your pricing of your standard CDs to get the volumes you want at that low cost. The low U.S. averages and the low local markets allow you to keep your costs down. But then for the customized offerings, we hope that you're creating a pricing that's relative to FHLB if you're in a borrowing position, and it's relative to U.S. Treasuries if you have excess funds. On this or any other matter, I welcome the opportunity to dialogue with you directly. If you want to set up a Calendly appointment with me so we can have a conversation about this or other matters, it is my pleasure always to meet with you. I want to thank you for joining me for this episode of To The Point.